Hi, everyone, and welcome to another episode of the AI Interconnect podcast, where we dive into the minds of funders, operators, and innovators shaping the future of real estate, tech, and everything in between. I'm your host, Lauren, and today I'm joined by someone who's been in the forefront of digital investor acquisition, performance marketing, and equity crowdfunding. Jason Fishman, a co-founder and CEO of Digital Niche Agency, aka DNA. Jason and his team have helped startup and growth tech company raise millions through strategic, compliant, and creative digital campaigns. Whether you're thinking about Reg CF, Reg A Plus, or just curious about data, how data funnels or even storytelling can raise deal capital, this one is for you. With Jason, welcome to the show. Very happy to have you on.
Thrilled to be here. Thank you for the invitation. Looking forward to connecting with the audience.
Wonderful. You're a marketing guy. You're very professional. You may have a podcast now, or maybe
Yes.
not.
Test, optimize, scale. That's my philosophy towards marketing growth, summarized in 3 words. Over 200 episodes.
Okay.
Not to plug the show, but a lot of good thought leadership. Not from me, from the guests. All from the guests.
Yeah,
of course.
yeah.
But lots of great content over the years there.
Okay, we'll cross engineer all this and maybe do partnership. That's cool. That sounds great.
Let's do it.
Let's start. Let's go back to the beginning, Jason. You have built one of the most respected performance marketing agency in the investor acquisition space. What's the story behind DNA and how did it all begin?
Sure. Well, I was working in ad tech before this at a mobile advertising network. I experienced the agency level, worked with a social gaming startup, was part of the fundraising round, successfully raised $3 million seed capital. It was back in 2011, and working in mobile advertising, Fortune 500, top 100 advertisers, top brands. I enjoyed it, but I was one of many other vendors on a vendor spreadsheet, talking about brands like Verizon and US Navy and Sony Pictures and Delta Airlines and Amazon, eBay, you name it. If I wasn't working with them, my team and I were at least speaking with them. I was overseeing the product marketing division. But I wanted to work with startups, had those successes here in the LA startup community, wanted to get back in to the mix, wanted to work on full stack marketing campaigns and be directly part of brands' progression, clients' growth. So started DNA as a growth marketing firm. And we were working to startup to mid-market groups, some of them underserviced by the digital marketing industry. Some of the groups, it was their first campaigns, decent sized brands, but first campaigns. But I found that fundraising was commonly part of this discussion. Whether we were working on a first marketing campaign, where the results were later going to be presented to an investor and scaled from there, whether I was working on the marketing section of a business plan, a pitch deck, even being asked to participate in presentations to investors so that brand could bring on more capital, it was regularly a part of our engagement. It was discussing how this was going to get them more capital. At that point, I was introduced to Regulation D, 6C, which allows for solicitation to accredited investors. We were able to market to high net worth individuals who had a high household income, high individual income. So I was able to look at that and think, all right, I know plenty of data groups in advertising. I can target ads specifically to these people. And I know a lot of groups that need this. Let's start running these campaigns. And we did, saw success. Our first Reg D produced 2.83 million. And we started getting introduced to more and more issuers, companies issuing shares. Down the line, you're talking 2016, Reg CF, regulation crowdfunding, went into law, went into effect, which allowed us to also incorporate retail investors. So essentially any US adult, we could, and depending on the country, depending on the market, depending on the filing, essentially any adult, we could target with advertising, with outreach, and bring into these marketing funnels. To date, have worked on over 500 of these deals that have collectively produced 9 figures of capital. I've worked on campaigns this year alone that have totaled over 100 million that they've raised collectively. We do so with content marketing, advertising, and outreach, and have refined our programs at this point. I also try to be an open book. We talked about the podcast. I serve on the Forbes Agency Council. I'm on the executive committee of the Crowdfund Professional Association, the Global Equity Crowdfunding Alliance, a list of other groups. Believe this is going to be the primary approach towards capital formation in the years to come, and try to give as many tips, as many findings from our initiatives to founders that I can.
I love it already. Wonderful. Where do I start? And I mean, okay, then was there a key moment you shifted your path between the before this world of performance marketing and capital raise in the first place, and you shifted at one point? Was there a key moment in this path?
Group telling me, hey, we're not ready to market our B2B campaign, but we are running an investor marketing initiative, capital raise online. They use some different terminology, but that was, a light bulb moment of, okay, we could work on that for you. And I think I could do very well at it because of the audiences that I can access. We have our own first party audience data at this point. I have a list of over 1.8 million historical equity crowdfunding investors. So we have our own secret sauce. Then as we saw success and I kept getting introduced to more groups, it's like, okay, it's important for a digital marketing agency to have a specialization, a niche. So maybe this becomes ours. We got attention from the reward crowdfunding world around this time as well too. Groups, agencies that were running Kickstarter and Indiegogo campaigns. So not for stock, but for perks. They started reaching out to us and saying, hey, heard what you guys have been doing on the advertising side, have seen you speak at different conferences, and we'd like to have you run some advertising traffic for us. Once we had some results with a few of those agencies, it became a very regular thing for us for the next year, year and a half. They're actually the ones who introduced us to Reg CF, regulation crowdfunding. Now, I do have to tell you, somewhere around the first year, 2 years of working on Reg CF, I was unsure if this was going to be the right road for us to go down. We were working with some groups that had some larger e-commerce campaigns at that point. Equity crowdfunding, it's shorter term clientele, in many cases lower budget. Once it's working, those same founders, marketing teams, issuers will scale up. They'll run a lot more in the advertising. They'll initiate rolling closes and take portions of what's been raised and reinvest it back into marketing. But it can be spotty as an agency in terms of clients in, clients sticking around. But because of our positioning, because of the amount of referrals and introductions we were getting on a daily basis, kind of fell into this. And then once we really sought to dominate our client list, a percentage of our client list when we were looking 2017, 2018, really getting into 2020. Okay, let's focus completely on this, do some very extensive data mining and pull out some of the investor audiences we could build. Let's be the best at the world, best in the world at this one thing. And then that's what we did.
Okay, great. Awesome. Then for people hearing about digital niche agency, DNA, for the first time, can you walk us through what you do on a day-to-day? What kind of campaigns are you running and what problem are you solving for your clients?
Sure. Well, to this day, the biggest part of our client list is Reg CF, regulation crowdfunding. About 1,400 of these deals a year in the entire industry. We tend to work with over 100 of them through each year. There is the Reg D filing where we still work with issuers. Some of them do side-by-side Reg CF, Reg D campaigns because you could raise up to 5 million at this point on a Reg CF USD, and then you can have even more on your Reg D filing, but from accredited investor audiences. There's another exemption filing that comes across our desk often, which is Regulation 8+. That's the big leagues. You could raise up to 75 million on a Regulation 8+ campaign. Some groups even use it to direct list and go public. So we've worked with companies on the Reg A as they were preparing to go public. So groups that have 3, 4 successful CF campaigns will often come to us to discuss, hey, how do we market a Regulation A plus campaign? How do we get tens of thousands of investors in on our deal? And day to day, we're marketing these campaigns. Some groups work with us post capital raise. So, hey, we did very well on our health tech campaign, our campaign with modern building materials, our campaign around a number of different verticals. Can you market to customers? Can you market to clients? Can you market to bring on more users for us or more publisher opportunities? So we'll keep working with them post fundraising. Given the nature of referral partners and the podcast, the conference appearances I do, we do get referrals. We do get requests from groups that are outside of investor marketing, but it's a smaller percentage of clients. We over 200 referral partners. We're always speaking to different groups. I should mention as well too, anywhere we're targeting investors and bringing them down marketing funnels. This could be investors for gold IRA opportunities, real estate. As you mentioned, some of them use these filings, but some of them different types of funds. Web3, anywhere we're targeting an investor as part of a marketing initiative, we can put numbers on the board is my thought towards it. Day-to-day basis, we have our business development team. They are sharing what we do, how we see success, the proper ways to market to investors, what works, what doesn't. A lot of misconceptions out there, proposals, agreements, then gets sent out. Eventually there's a kickoff. I like starting at the kickoff point. We have new kickoffs each week for the most part. And our account strategists, creative director, content marketing head, media buyer, editor are on these discussions with our account director. We get into weekly calls with clients. We're setting up advertising dashboards that we've customized, launching ads, targeting our audiences, bringing investors through with advertising, and then engaging them with content marketing, social media, email, long form content, including articles, videos, webinars, and other live events, press releases, other types of collaborations with influencers, thought leaders, streamers. Typically, it's 7 touch points or more before an audience converts, especially on an investment. So we want to be intentional about what those audiences see when they're searching around and doing their due diligence. We're basically building content marketing funnels and then driving traffic into it with advertising and with outreach over LinkedIn and email.
Wonderful. Okay, Dan, it's clear. It's a lot of info, a lot of insight. I love it. And I know DNA offers, as you say, then a full stack service from funnel design to creative testing to analytics, dashboards, all with very compliance aware lenses. And how do you balance creative performance with FINRA or SEC guidelines? That sounds like threading a needle.
Sure. Well, I'll have to emphasize we're not a FINRA regulated portal. We're not lawyers. We're not accountants working on the filings. So I really direct those questions to those professionals. The same way I wouldn't want a lawyer talking about how to market these campaigns, maybe sharing a note and then introducing them to a group like us. I don't want to touch the compliance aspects of these runs. There are some advertising rules that we need to follow. I'll tell you where these campaigns are running. Each portal has their own perspective on those rules and what they mean. So we point them to whoever's in their corner in that regard. Hey, here are the advertising drafts. Here's the content for the week, for the month. We recommend you get sign off by your team. So they do. And then we're able to take it live there. For advertising, you could talk about tombstone information or non-tombstone information. Tombstone information being the terms of the deal. So you're either mentioning the terms or you're not mentioning the terms at all on the advertisements. It's typically the latter. But again, I don't want to provide a legal opinion for clients as much as going through our strategy process, looking at the competitor audits, looking at what we've done in the past, building creative that competes with those ads, because that's what we're really looking at as the marketing, and typically find we're getting easy sign off on those types of messages and visuals.
Yeah, makes sense. Let's talk about the ecosystem you work in. What trends are you seeing across investor acquisition right now? Are there retail investors behaving differently than they were a few years ago?
Yes. few years ago, we're here in 2025 during this recording. We're talking 2022. I would tell you there was a spike for this space during 2020. COVID, the emergence of the Robin Hood investor, the retail investor. We saw the impact on cryptocurrency as well. 2020, 2021, early 2022, there was a lot of activity. A lot more retail investors entering the market, accredited investors throwing money at anything they could. Some thought leaders would say, I'm just mentioning it to paint a picture. Conversion rates were higher, if you will. I noticed a slowdown as war started coming up in media headlines. Public markets were affected in 2022. 2022, 2023, pretty stable, kind of stayed at those levels. And 2024 saw a little bit of a dip in the regulated investment crowdfunding space. But again, stability from there. Throughout this entire period of time, what I've watched is essentially the same thing I saw occurring 2020 through early 2022, where the top deals were getting most of the investors and the bottom half of the deals were pretty stagnant. I could throw some numbers around that. But it's the crowd effect, and investors are going towards the opportunities with the line around the block. I've also seen that we've seen stronger performance. The numbers I've looked at have been much better than offline capital raises. Industries like biotech and medtech, health tech tell us that VC capital has dried up in their space. And we've worked with many of those groups over the past year, over the past few years to hit their full goals. And I believe many more of them are now following, just based on the inquiries I get on a daily basis and the strategic partnerships I've built because of that, because of the reluctance for, call it, larger investors to fill the whole round versus going after the crowd and bringing in high volumes of smaller investors. You could look at some of the political activity and funding this year, government, non-government, they're facing some different issues. Meanwhile, if they could bring in a few thousand investors to raise a few $1 million, $1,000, $2,000 average investment on a Reg CF, it's a very productive place for them to put resources. They could, again, do the Regulation A Plus campaigns, much larger rounds. They could do Reg D, just a few accredited investors, but individuals versus groups of investors. So on a Reg CF campaign, the top 7% raise $1 million or more. The bottom 50% don't raise over 110-ish thousand. You have to bring some capital from your first degree network to really kick off the round, because these campaigns are so public facing. This is part of the formula to see success, if you will. So if a med tech company is bringing in a couple $100,000, it's showcased on a Reg CF offering page. We're then advertising, reaching out to different investors, doing follow-ups, putting out headline-worthy announcements on a weekly basis involving social proof and third parties. They can build a system. They can build a funnel that's converting at a high enough level where if enough traffic's going through, they're able to bring in these high volumes of smaller investors, and it's really working for them. The industry as a whole, if you're just looking at Reg CF, if you're adding Reg CF and Regulation A Plus, you may be able to see years that were a bit higher. I think combined Reg CF and Regulation A Plus this year is going to be the highest. But 2024, hey, CF's a little lower than past few years. Plus is picking up, but it's still that same, there's less campaigns live, and it's still that same breakdown of the top campaigns are doing very well. Doesn't matter what's happening in the news for the most part. Doesn't matter the time of year. It could be the second half of December. There's still going to be groups using these exemptions, using these filings, actively bringing on investors. Every one of those days, there'll be new investors coming in. So we found it to be a powerful tool, powerful place for issuers to put their energy. Does every campaign work? No. Has there been some slowdowns looking at the whole industry since a few years back? Yes. Do you have to do more in the messaging to articulate why this is the best investment right now? Yes. But if you're following the formulas, you're putting out good marketing campaigns, I think success is easier now than ever.
Thank you. Great analysis of the industry. Are some a certain type of companies, say prop tech, clean tech, commerce, consumer, doing better in these campaigns than others? Or is it more about how well they execute their narratives?
I think it's about how well they execute their narratives. There are verticals that tend to be more popular during any given period of time. I say during a period of time because I don't believe it sticks indefinitely. We've seen solar campaigns do really well. We've seen solar campaigns dip. Same's true for other categories of energy. I've seen various types of modular homes do very well. We've seen them kind of bomb. So I'd say within any vertical, there's going to be winners and losers. There's going to be different deals that investors pay more attention to. And it comes down to what you're saying. What is the messaging? What is the narrative? What's the social proof? What strategic partners do they have? Who's on the team? What do their numbers look like? What does their product look like? More than, hey, this vertical had a very successful issuer earlier in the year. This next company is going to produce results as well.
Okay, yeah, that's true. You mentioned creative testing in some of your other interviews, and
Yeah.
how do you approach testing when ad fatigue is so quickly, and especially across platform like Meta or Google, where cost swings fast?
It's a great question and goes back to that last point of it's not just the category, it's not just the channel you're marketing on. You have to have very intelligent rollouts. You have to really take into account what are the competitors are doing? Who are our target audiences? What touch points are we going to be reaching them on? And what creative, what messaging, what visuals are we putting in there? So, how do you stand out? I'm looking at probably 30 different logos in front of me. Those can all be considered advertisements. I heard a crazy stat of 60,000 advertisements a day we see as individuals at this point. How do you get through that clutter? How do you not have fatigue? Where if you're seeing the ad day in, day out, do you really care at that point? I think it does start with that competitor marketing audit. It does then take an exploration of the target audience to see, what they are going to be engaged by, captured by. And for me, it's all about social proof, third party validation, who's talking about the brand, who's talking about the investment opportunity. Can we get an anchor investor, testimonial, lead investor? Can we show some publisher logos? Can we talk about how many investors have participated? Can we talk about how much capital has been raised? Can we talk about some of the strategic partnerships, government contracts, anything notable that they're doing that positions them in front of the competition? We want to use as few words as possible. We want the ad to pass the glance test and for the key points to resonate and have a closed loop system. So we're actually testing this with audience, with target audiences and getting their feedback. Not just going off assumption. At the end of the day, it's all going to come down to that data. Test, optimize, scale. Something I say a lot. I like to test 4 to 10 audiences to begin. I want to test 4 to 8 different creatives upon launch and then new creatives every week to 2 weeks thereafter, depending on how many audiences we're running, how much media is going out to each on the advertising side. I want the analytics to show me what's working. I want to make data-driven decisions. I want to look at it as an algorithm, not just the end result. Hey, what's the return on ad spend for each of these? Isn't going to get you too far. You may look like you know what you're doing if it's producing right out of the gate, but if it's not, you're going to get pretty stuck. And I say may because a data scientist is still going to be able to tell you a lot more about the contrast from each audience segment. So they were talking about a platform like Meta inside each campaign, and a campaign has its own KPI, its own key performance indicator. So we'll set up campaigns for traffic, we'll set up campaigns for conversions, we'll set up campaigns for leads. It's optimizing off that event. It doesn't care. The pixel, the machine learning doesn't care about the other events. we've found we get traffic at the lowest rate if we're balancing this out and from the audiences we want. Again, we have our own custom audiences, our own lists we upload. Conversions focus more on retargeting and the best converting segments. So we know we could pay more for click there. Leads, given the nature of the campaign, at least for a webinar sign up, we want to make sure we're producing leads. But if we're going inside the conversions campaign, looking at the audiences in there, looking to test out comparatively each of those different groups, look at where we're getting the best performance, look at how much we're bidding on the impressions, how much uh, click traffic we're getting from there, the cost per click, the click-through rate. 1% is an average click-through rate. I want to see 2 to 5%. 3% versus 1.5%. You're cutting your cost per acquisition in half. An important number to look at. You then look at the conversion data and mid-funnel conversion data. Maybe you have additional events in there, such as add to cart and initiate checkout. Maybe it's around the purchase event, as it is for many investment campaigns. But you want to find these pockets of performance and not just use Facebook's optimizations towards, hey, how much are we spending towards each audience, each creative, but manually changing up the daily pacing, the daily spend amounts, and doing more of what's working while phasing out what is not producing for you. Looking at opportunities to scale from there, and then getting to those optimization stages, and then ramping up, increasing the daily budgets. That's what we see on the big league, the Regulation A Plus campaigns. As I was mentioning, worked on multiple campaigns, done over 50 million this year alone. So that's what it looks like under the hood of one of those vehicles. And that's what it looks like for me around creative optimization, testing, and getting things to a good point right now.
Yeah, that's great. Listen, audience, it's better than a master degree here. Okay, every business has friction points, and even when it's growing. What are the biggest challenges you are facing right now, Jason? Whether it's operational or team related, or even just scaling complexity, like you mentioned it before, all the above.
Sure. Well, working on campaigns that could have a shorter timeline, business development is always something you have to make sure is flowing. So we have our numbers of how many new deals we need a month, quarter, for the year to really have our model succeed and thrive, grow, take on more market share at that. We then have account management, which it's professional service. It's delivered by a human. It's not always going to be the same. So from one account manager, account strategist to the next, dealing with different clients from different industries, different age groups, different geolocations, different personalities, the experience is going to range from one group to the next. And that can be difficult. As a business owner, you want to have consistency around your product. So making sure that we're not only hitting our deliverables, but client satisfaction is present every time. Performance is present as much as possible. It won't be for every campaign. There's inherent risks with capital raising. There's inherent risks and obstacles with marketing. So being able to be the right partner, talk through that, determine what to test out next, being able to manage things to a point of effectiveness, which is difficult. Marketing campaign doesn't work a month, 2 months in. Some groups want to cancel. As a marketer, that's not the right thing to do, as much as, hey, we need to keep testing. We need to test different channels, and in those channels, different audiences, creatives, and funnels. We'll be able to get this to a point where there's lifts in performance, but it can be tough. One of those things too, where as a business owner, hey, if I spoke to every client, if I spoke to every brand, we could lock arms, we could get things where they need to go, establish trust, come up with some new creative that's very exciting. But having your team do that and at scale, it's not a missing or anything like that, but something that needs constant attention and collaboration. You figure out the right ways to incorporate that into the schedule. I've seen other agencies in my space disappear, fail because of it. Some were acquired and then failed. Some became in-house departments and then failed. I could name many at that are not here anymore. Some of the portals, the FINRA-regulated portals that run these campaigns have had Marketing departments come and go, and sometimes they're good, sometimes they're not. Marketing agencies as a whole can get a bad rap. And I think it's because of this. How does an agency communicate? How do they align with a brand and allow them to see, hey, not everything's going to work. We can't talk too big of a game. We can't overpromise in the early stages. We're going to need those numbers, that data to show us what's working, not just tell you, hey, we've done stuff like this in the past. You're going to see a 10x return. You're going to see a 20x return, as much as, hey, we're going to set the right framework with the strategy, right content marketing funnel, start testing ads, start testing outreach. But I would tell you, biz dev, account management is where a lot of the time goes, and product creation. We always want to figure out not just what's working today, but what'll work today. It's going to be even more powerful tomorrow.
Okay. Yeah, and okay, if we zoom out, what do you think your clients struggle with most? And is it understanding compliance, feeling the creative, or just trusting the funnel process over time?
Clients struggle with the most, I would say, is marketing through mediocre performance in path to stronger results. Because if we're working with the marketing director, if we're working with the founder, they likely have a CFO or some finance partner, someone who's saying, hey, it's month 2. We got a X return on ad spend, where that may work for some e-commerce companies. That's not a good cost of capital for a group that's raising funds. Now, if you're zoomed in, you may shut things off at that point. Hey, we had a month of 1x, now it's 2x. We're not making any money of this thing. This isn't sustainable. We can't keep spending on this. Cut. No more agency, no more marketing. Some investors want to get in, great, but we need to put our focus to speaking to VCs, traditional investors. I'll hear from these groups 6 months later if they actually stop, and they'll say, hey, we're doing another round. VC markets, I don't know, they're kind of quiet right now. It's the market, right? And we want to get things started, where we've had other groups market through that period and their audience building. And likely, if we're getting X, we're going to be able to keep optimizing towards the groups that are investing within the existing targeting. And in the coming weeks, in the coming months, get it to 3 to 5x. 3 to X, we're going to tell groups to scale and have to, do some projections, show them what it looks like from there. But as they're bringing in more traffic, they're bringing in more investors. As they're seeing more investors, some of those come in at higher levels. Then the returns start getting better, maybe 5 to 10x. Eventually, it'll move to a close, whether the campaign's selling out or there's a closing date. They have to wrap things up. Then there's a fear of missing out from the prospective investors. So we see a lot more conversions come at that time. And groups that may have been at 2x month 2 are now at 10x on the pixel data by the end of the campaign. It all rounded out. So being able to talk through that, being able to mention, hey, pixels don't track everything. You may be at a 2x on pixel data, meanwhile, X marketing efficiency ratio, and we'd actually be assuming 3 times the amount of conversions are occurring beyond just what the pixel's tracking, if it's Meta or platform like it, where mobile users have to opt in to be tracked off app. So being able to speak through that and have the trust from your partner and have them continue and scale, have the results actually show up, meaning more investments scale as well too. That's the ultimate test to see what's coming from where in terms of attribution. So I think the toughest for a client to trust through the slower periods, even scale through the slower periods, so that the initiative as a whole produces more at the end of the day.
I can skip this. Where does AI fit into all of this for you right now? Are there parts of the your marketing stack you think are ripe for automation or are already being disrupted?
Sure. So I want to use AI where it has more capabilities, more function, more reliability than a human. I don't want to use AI just to use AI. I know solopreneurs, contractors that pretend they know everything about AI and talk about it, how it's the future. Meanwhile, they don't have the results. They don't have the traction for what they do on their own to really warrant the listening. And I say that because there's a difference from getting things done, getting them done well, having quality present, and using shortcuts to get there. I am focused more on the quality than even my team's time. If I have to put a team member on it for longer, team members on it for longer, but the quality is better, I'll pick quality every day. That's what clients expect. That's what clients demand from us. That being said, I think it's important to have an AI platform open at all times uh, while you're at the office. And if you're wondering about something for longer than 10 seconds, you should probably type it in there, see what comes out. There may be some research it points towards. There may be some different systems, a formula, something that's recommended. I will tell you it's regularly wrong, and you're likely going to have to put multiple prompts in there. And if you're an expert in a space, you're going to be able to identify, hey, that's wrong. Good point. Good find. Sorry. And, it points towards something else. My wife's a lawyer. It'll point out fake cases. Like you really need to double check what's coming out of it. Meanwhile, for what we do on the research side, it can really bring us a lot more information quicker. It could find things that we wouldn't have spent enough time to stick around and identify. I spend a lot of time in spreadsheets, data mining. I can pull a list of 10,000 companies and in less than a minute have answers around the companies that are in that entire list. I could identify trends. I could find contact info. I can do so much with that data that would take me hours, days to identify on my own. To be able to then put into samples and make projections and put definitive statements around matter of moments. Our creative team uses it. Visuals, video, the ability to put a prompt in and have something come out right away. If you're good at it, the ability to put more prompts, even high volume of them thereafter. So you're getting it to a great spot, exactly what you want. I would say good AI usage for creative, whether it's a graphic, a video, even just text written into a text body. The audience doesn't know it's AI. As soon as the audience thinks, hey, there's a bunch of dashes here. There's a bunch of writing that is very clear from AI. Some of the same word usage, some of the same formats, color filter. I mean, it just, in my opinion, looks like laziness. So we don't want our audience, we don't want investors thinking, hey, some AI created this. The same would be true for automations, and we love automations. I wouldn't say all automations are AI. I think anything that's tech these days gets mislabeled as AI at times. You know, got my AI candle in this room. Oh, you mean your light switch? You have a switch and it turns on the light with the electricity. Everything's AI. Everything. Uh, AI chef. That's a vending machine. But hey, uh, automation as a whole, used for email, used for LinkedIn, even if it's manual at first and then going into an automated drip afterwards, but you're following up thousands of different prospective individuals based on their archetype. So you have messaging that's customized for them and filling in from different aspects of their site. There's very cool things you can do with automation. But again, it has to feel personal, it has to feel authentic. As soon as the audience questions, hey, is it just AI? Sending me an email here. Is it just AI following up from this person's profile? Is this even a real person? You're done. You're not going to get the same type of response rate than if someone's doing it manually. So that's where you have to weigh out. Is the high volume worth it? Is it better to do unique, different answers for different questions around it? But then there's far more we're doing with accounting and what we're doing with customizing some of our administrative items and what we do for analysis of the business and what we're doing during the strategy stages. So there's always more, but all going back to that first question and figuring out what's best for us here in 2025.
Of course. Okay. Then before we wrap, I'd love to zoom in on you a bit. What's what's one mindset or principle you live by as a founder? that's helped you navigate this space for so long?
Do more. Don't give up. Don't be weak. 9 out of 10 groups fail their first year in business. You know, having over 200 founders on my podcast, it's like, okay, they all have a certain relentlessness, grit, determination around them. Where, what did they say in Star Trek? Even upon certain doom, even if you know things are going to fail, but you're pushing through them and you're figuring out different ways to optimize, you're figuring out different ways to find shortcuts or mentors that can give you some cheat codes and you're able to stream things through. That's what I've learned. I mean, there's been periods where anyone in their right mind would have stopped and given up. And I'm so glad I didn't, because we were able to grow things much stronger within a year thereafter. You just got to keep pushing through, and there's always more to do.
Perfect. Love it. Resilience. Grit. Okay. What's something you have changed your mind about recently, even either professionally or personally?
Something I've changed my mind about recently. Well,
We can pass.
yeah, we'll pass on that one.
I think our audience will love the details and the insights you're providing. And Jason, this was such a valuable conversation. Thank you so much for sharing your journey, these insights, and all the wisdom around digital investment acquisition. Thank you so much. It
My
was
pleasure. Again, really had a great time being
great.
here. Invite anyone to
Time
get
flies.
in touch with any marketing questions. Looking forward to find more ways to collaborate with you over time as well too. And test, optimize, scale. It's just
Yeah.
a test until it's validated. Keep optimizing and scaling until you get there. Have that
Okay.
determination.
Wonderful. Where do people, audience can find you and or
Sure.
your team?
Can head to our website, digitalnicheagency.com. Can find me on LinkedIn, Jason Fishman, DNA, Marina Del Rey. Can also check out our YouTube channel, where we have a weekly podcast episode as well as a monthly webinar, a lot of guest appearances as well too. So would invite you to any of those digital locations.
Wonderful. Jason, thank you so much. It was great having you.
You got it.
Thanks.
Take care,
And
guys.
that's it for today. Thank you so much. It was great. That's it for today's episode of AI Interconnect. And if you enjoyed it, share it with someone who is building the future, or better yet, someone who should be. And until next time, stay curious, stay creative, and keep building. Thanks.